What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Natalie Gill, Portfolio Strategist at the BlackRock Investment Institute. This week, I'll be sharing our insights on the outlook for US company earnings. We think earnings resilience will be key for sentiment, especially after last week's sticky inflation data spooked investors. As first quarter results roll in, we look for brighter earnings across sectors, not just in tech. Strong earnings have been buoyed by cooling inflation and solid employment, helping companies to maintain their profit margins broadly. We still think market sentiment can stay upbeat, but core service inflation, excluding housing, could pressure overall inflation, indicating potentially higher rates for longer in our view. A key question for stocks is whether economic and earnings growth remains strong enough to offset that macro outlook. Surprisingly robust consumer spending has propped up growth, but we see a switch happening. Consumer spending could slow as households exhaust pandemic savings. This could happen even as companies keep ramping up investment in factories and facilities given major government incentives such as the Inflation Reduction Act. We see earnings forecasts holding up this year, unlike previous years where they tend to revise down. Analysts see overall 2024 earnings growth of 11%, above the 7% historical average. This fits with our upgraded US growth view. Industrial earnings, while moderating, remain strong. Energy and commodity producers are picking up, with commodity prices at a near-decade high. This recovery in sectors beyond tech is part of the broadening out of stock index drivers that we expected. We expect earnings to broaden beyond tech, favouring AI beneficiaries. We're overweight US stocks. We look for selective sector opportunities in industrials, commodities, healthcare, and energy. We expect diverging sector performance on a tactical horizon of 6 to 12 months. Commodity production cuts have occurred along with better than expected demand, pushing up prices. Megaforces, structural changes driving returns now and into the future, are also a factor. Key metals for the lower carbon transition, such as copper, have rebounded sharply and could have room to run. We see AI advances stoking the build-out of data centers, resulting in major commodity demand. As geopolitical fragmentation plays out, companies bringing production closer to home can boost industrials. And we see energy stocks as a potential portfolio buffer against geopolitical risks. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com